Well, hello everyone, and welcome back to the Man and Machine, episode 109, here with the PeakBot team and Mark Phillips from Harvested Financial. Gentlemen, happy Monday. Good to be with you this morning. How we doing?
Good morning. What a Monday it is, isn't it?
I'm not sure yet. I'm not sure.
2025 Mondays hit different, right? You checking futures on Sunday night just doesn't have the same vibe this year.
Yeah, no,
that's right.
I agree. Tell you what else. It was dark. It was dark this morning with the change in daylight savings. Really quick, let's not get lost on this, but are we for or against daylight savings here? Yeah. Mark,
We're a standard time person as opposed to a daylight time person.
Okay. So
is that what you're saying, Ben, or you're just against all change? You just want
I want it to be light out longer in the day.
Okay, so but would you prefer never to make the switch, you think?
Yeah.
Okay. All right.
I think the switch is unnecessary, but what do I know?
I mostly think the switch is unnecessary. Like I had prioritized that. And if I were to choose one or the other of having, I think I'd prefer daylight time, which is what we're in right now, I believe, because I want the sun lighter in the evening. I don't care about the morning. It's dark in the morning anyway.
Yeah, exactly.
I think everybody wants it to be lighter out in the evening.
I would hope so.
It's not true. I had this discussion with my mother-in-law last night. She's a daylight time because she's a standard time because they're at the western edge of their time zone. And so you get whacked for a couple months, or like a month or two of the year right around now, where sun doesn't last until like 8 or 8:30.
Oh, that's horrible.
Like people in Michigan, they're Eastern, and they are miles west of where we are on the East Coast.
It's exactly that. Yeah.
Wow.
Yeah.
Now I saw one thing, and then we'll get into the show because we got a lot of good stuff to cover. I saw a thing, not validated by any means, probably on Instagram or something, about like the seasonal depression and how real it is. Like when clocks move, like I don't want to say something as serious as like suicide rate goes up or goes down tremendously, like year over year. It's wild. But anyway, happy spring soon. What is the first day of spring? The 22nd. So we're almost there. But anyway, great show for everybody today. Got a lot to go over. Of course, we'll do a very quick, brief overview of the PeakBot Picks contest. We're going to do stocks in real life, talking about PayPal today, the stock and our experiences with the company. We're going to learn a little something, of course, with Mark and a lot of other stuff going on. So, fellas, what do we think? Let's get right into it.
Let's do it.
Awesome. So quickly on PeakBot picks last week, myself personally, I went 1 for 3. Walmart broke my heart again a little bit. Market didn't really help that, but it's okay. I have the shares. We're working through it. On trend spread, I went 1 for 2. I took a W on a Etsy call credit spread. Trend spread bot took profit for me early. Entered Friday. Took profit on Monday for 60%. Love that. Nice. And Ben and I actually had the same trade, I think, on NEE, maybe slightly different strikes, Ben, but a call credit spread. I manually got involved, which I've been doing more so a lot more recently, which I love and hate. But they got a piece of news came out about energy stocks, and they were like the number one, stock in the whole thing, and the rocketed last minute. I took an $18 loss on it, but 1 for 3 for me. Again, Walmart hurt me a little bit. I own the shares at like 98. It's trading at like 91 something, 92. So bit of a hole to dig out of there, but no worries. Ben, how'd you do?
I went 3 for 3.
Sure did.
So I traded. Let me pull up my tracker here. I traded Google, Citi, and I also traded ticker NEE. I took the win on that because I waited out that pump, and then it dropped back below the strike price that we sold. So I went 3 for 3. I took home $39 on Google, 23 on Citi, and 14 on NEE. I don't remember the name of that company, but that was a total of
NextEra Energy.
NextEra Energy. So I took home a total of $76, not bad, on a total risk of $75. So that's a 10% ROI on the week. I'm happy with that. And as we learned on Friday, I am starting to take a new approach to the picks going for higher ROI, and it's going to be higher risk naturally. But anyway, so $76 is the price to beat if Thomas also went 3 for 3.
Which he needs to update his picks. I'm messaging him now, so he'll get those in there. I believe he was close, right, Ben? He was flirting with 3 for 3 when we checked on Friday. So
yep.
So very cool. That's the PeakBot picks update again. For those of you who haven't been checking in over the last few weeks, we're doing it live. These are trades we're actually taking in our automated trading accounts. I'm doing it in my Tradier account. We can see all the shares and trades. So excellent. Stay tuned. We'll be live on Friday with some updates on that. Let's get into stocks in real life if we're up for it. Yeah?
Yeah, let's do it. We've got a tech company today. FinTech, one of the early pioneers of FinTech, PayPal, formerly known as, wasn't it known as X.com, or am I misremembering that?
Don't ask me. I'm not sure. Mark, do you have any?
I don't know if it ever officially had the name, but I do believe that was one of Elon's ideas for PayPal, that he's sort of reinvigorating at Twitter right now, or formerly Twitter, that X was, they had ideas of it being the everything kind of app.
Yeah. Okay. So in 2001, the company rebranded entirely as PayPal, moving away from the X.com name.
Wow. Nice pull.
And I mean, obviously we referenced Elon, but one of the most impressive things about PayPal is the crew of founders that came out of there, right? Like,
oh yeah,
it's a who's who of tech giants.
Oh yeah. Yeah.
Listen, I'm not even sure. I got to do more research on PayPal.
We got
it might have been
Peter Thiel, David Sachs.
Okay. Some studs.
All those guys that you hear about. And I think that it's prominent now because they all went on to do other high profile things with their lives. Yeah. Like if they had just taken the money and retired to a beach, wouldn't be so impressive. But I guess that's why PayPal works. It's you get a lot of smart people in a room, smart, motivated people in a room. You can do some really cool things. So PayPal is interesting. PayPal changed the way that people paid for things online. And I vaguely remember when PayPal first came out, my parents had always said, if a website asks you to pay via PayPal, don't trust it.
I remember that. I almost still feel that way. I hate to say it about PayPal, but yeah. Mark, was that ever a conversation? Was there ever a lack of trust in PayPal when it first came around?
Yeah, I mean, it's sort of like it was a site that couldn't process credit cards. And if they can't process a credit card, like, what's going on here?
Yeah.
And you're always sort of, I know they've got a bunch of new like guarantees and seller protection, buyer protection. But it always sort of feels like, it was very connected with eBay at the beginning. And it always sort of felt like you were going to buy something and weren't sure what you were going to get, whether it was going to show up at all, what the quality was going to be like. It definitely was, it felt like a, facilitator of fringe transactions.
Yeah. So how about since the transition, I mean, Ben, what are your thoughts on PayPal? I know we've had our experiences as a business with PayPal. Do you trust it? Do you like using it? How do you feel before we get into this?
It's funny, my overall feeling has kind of flipped. If a website is not offering PayPal as a payment method, then I almost think, okay, well, maybe we don't trust this website. Now, I can't really say that because at PeakBot, we don't offer PayPal as a PayPal method. So from the business perspective, I understand why companies wouldn't, and we won't get into that right now. But I understand both angles now. So really, I'm indifferent.
Okay. So
it's kind of, and we're talking about a lot about like business payments with PayPal, but it was also used for a lot of personal payments too, right?
Yes.
That like you could definitely do peer-to-peer payments originally. And it feels like that market's getting carved out by the Venmos of the world.
Yep.
And on a business payment side, you've got competitors like Stripe that'll offer, credit card transactions in line. So, a lot of different competitors to PayPal, but they were clearly the first here, right?
Yeah. I believe so. And you're absolutely right. The space has gotten very busy. Stripe, Square, Venmo, Wise, Google Pay, and Apple Pay. I mean, like, if I'm at that point now, if I'm at a site, especially on my phone, and I want to check out and it's not giving me Apple Pay, like, I'm upset if Jersey Mike's isn't giving me my Apple Pay option to check out. You know what I mean? I need that. I need that option. But yeah, and then Zelle too, right? For the personal transactions, the banks kind of stepped in there. That's certainly, very popular today. Let me ask you, do you guys have any guesses on when they went public? I have it pulled up here.
Yep, that's a good point, actually, from Crossroads, that Venmo is actually a subsidiary of PayPal.
Oh, really? Okay. All right. Good point.
Venmo was acquired by PayPal in 2013.
It was that long ago. Wow.
Yeah, and prior to that, Venmo was acquired by a company called Braintree. Here, let me actually pull up the numbers because it's an interesting story. And then I think it was the CEO of Braintree is like the guy that wants to like live forever or like reverse aging.
Brian Johnson.
Yeah, that's his name. So PayPal. So let's see. In 2012, Braintree acquired Venmo for $26.2 million. And this is the AI overview on Google, so maybe this isn't 100% accurate. But and then in 2013, PayPal acquired Braintree, which included Venmo, for $800 million. So not saying that that's all that Braintree did, but it was in the suite of things that Braintree did. So,
jeez, I can't believe Venmo's been around that long. I feel like I was late to it then. So with PayPal, any guesses on the IPO?
1998.
Yeah, I think we might have a 9-figure here. I'll go 99, but I think.
Okay. So I could just be looking. I'm looking at the trading view chart here. I'm seeing a July 1st of 2015 IPO. Can't be correct.
No, it looks like they went public in 2002.
Okay. All right. Well, here's what I was looking at. I pulled up my trading view, which I feel like is my trusty charts now, and I went all time, and I'm only getting back to July 2015 here. So
they initially had their IPO in 2002. Then they were acquired as a wholly owned subsidiary by eBay 6 months later. And then in 2015, which is the date that you're getting, eBay spun them off. So PayPal has had 2 IPOs.
Okay, gotcha. Well, my apologies for the false information there. My chart did me wrong. So been around quite a while. Mark, any stories for you with this stock and trading it? I mean, it's been on a little bit of a ride. Saw highs in COVID and then has come, back down to reality a little bit. Ever trade it?
A little bit, not all that much. I mean, like, it was obviously out of the, it was off the market from 2002 to 2015. But recently, definitely a lot more chop. And very recently, obviously this has taken a hit with a lot of the other tech names into 2025. You want to pull up the chart, actually?
Yeah, here, let me pull it back up here. Ben, I'm going to pull this up here. Yep. So yeah, I was looking at this here, this 2015 July 1st. So yeah, here's the chart all time since that IPO. So yeah, we can see it's kind of ran up right here in COVID, came right back down, and has floated in between what looks like $50 and $80-$90 since then, since 2022. So yeah, thoughts on this? How's vol? What are your thoughts on PayPal overall?
Medium vol product, right? Like average X earnings is in the 30s, pretty steady around there. Not much has changed in those markets. We get spikes of double that around, the earnings announcement, but 30 vol, 35 vol, X earnings, it's pretty tame. I mean, hell, we have SPX at that level practically now.
Yeah. And I was looking at analyst ratings here. We're kind of right at the bottom, at least of where analysts see the forecast over the next year. Some see this going as high as $125. 47 analyst ratings, 20 of them give it a strong buy, 20 of them give it a hold, and a few others there. So, Ben, I know for me, this falls into my trend spread, watch list often. I've traded it a couple times. I don't think as of late, I don't think I've traded it in the last few months here. When looking at the technicals, and I'm going to pull it up on the trend spread watch list right now, it looks a bit bearish. I have it on the watch list here. Of course, this is Friday's data. This will update again this morning, but closed at 70.34. It is bearish, so the trend spread bot would sell a call credit spread here. Moderate risk compared to the others on the watch list. This is a nice expected value here, over 3%. Pretty high pop, just missing our 77% threshold for the core four, that would make this box green. So pretty good win rate there. ROI is great, and buffer is good. This is a nice play right now. So it's only a $3 spread. Okay, paying $35 at premium if we were to go from 4 DTE from today to Friday, and we'd be trying to stay under $73 by Friday. Ben, while I mark that on here, you ever trade this recently? I forget.
I was just looking at my trade log on Tradier, and why can't I add this to?
You got to take mine down now, I think.
Oh, is that a new setting?
It is new. I hate it, but it's all right.
Okay. I did trade PayPal, it looks like, with the trend spread bot back in February. On the 14th, I opened up a call credit spread, so I was bearish at the time. It looks like I collected about $46 in premium. That's the 58 cents minus the 12 cents, multiplied by the one contract. And it looks like I did manually intervene here and just let those contracts expire worthless. So one trade on PayPal, one win, 100% gain. That's my experience with PayPal.
Now I gotta look at mine. By the way, this is right now. Again, this could completely and likely will update today before noon entry on the trend spread bot. But when looking at the chart here, under 73, last time we were there was end of February, around the 26th. If we were to zoom out here, we can see this is what we're trying to do and stay under if we're taking this trade. Here's the last 5 days. It hasn't been above 71.50. So we can zoom out here and kind of see. I mean, looks like there was a lot of volume here just in the last few days on the stock, more than usual. But yeah, I mean, I don't want to say that this looks like a lot of breathing room, but it does. It is. What other thoughts do we have on PayPal or any other, tech products in this industry?
Looking at this name in the macro environment, is you say that's not a lot of breathing room, but overall, and I'm sure we'll talk about this in a couple minutes, there's a lot of froth under the market right now. So I think if you're looking at relatively high beta names or stocks that are generally on average more volatile than the regular market, looking at this backdrop and looking at a name like PayPal, you really have to look closely at how much breathing room you're giving yourself, so to speak.
Yeah, absolutely. And beta, what I'm pulling here on PayPal right now, 1.1.
I would have expected more, but and we're down like 30% year to date, I think.
Yeah. Yes, you're absolutely right. So, all right, I'm going to check to see if I've been trading it, but I'm going to keep an eye on this. It's hitting 3 of the 4 core 4 right now. I took a couple trend spread plays on Friday for PeakBot picks, but I have not activated any trend spread plays in my other portfolios, which I'll be doing today at some point. PayPal's on the radar. So,
awesome.
What else?
Let's move on. How about that?
Let's do it.
Cool. So we are going to learn something today. We're going to learn about stop losses and take profits. So a bit of a break from the more, I'll call it complex or
201, 301.
Yeah, 201 type lessons that we've been doing, and take it back to the 101. So if you're new to trading, listen up, because stop losses and take profits are important. And we've got Mark Phillips, the principal of Harvested Financial, here to tell us all about stop losses and take profits. Mark?
Yeah, this is great. So like you said, we've been talking a lot about the Greeks and a lot about like kind of the theoretical construction, the risk management, the evaluation of option spreads. But stop losses and take profits, I don't know that they're necessarily that 101, because whether you're at the 101 level, 201 level, or 301 level, they're incredibly useful for managing a trading strategy and how the rubber hits the road. That you can have, all your ideas about where vol should be going or whether spreads are cheap or expensive, but the tools that stop losses and take profits, or I should say the features that these tools provide are incredibly useful for constructing strategies and, managing your risk when you're in a trade that might not necessarily be going your way, or conversely, something that's going to allow you to kind of capture that opportunity, lock it in, and not wait for expiration or, leave time on the clock for it to zag the other way. So mostly, we're talking about these in the context of credit spreads. Most of the strategies for now are credit spreads, although to tease, we do have a couple buy-side momentum strategies coming out. But in the context of credit spreads, you're generally going to be short some amount of premium, and that is going to be defined by the bounds of the strikes that you have. So while that spread in and of itself is a risk management tool, knowing you can't lose more than the width of the spread minus the premium that you collected, by layering on either a stop loss and or a take profit, the stop loss is going to prevent you from or prevent your position from getting to any worse price than whatever you set that on. So here we have a stop loss limits potential losses is the market moves against your position. So typically this is defined by some percentage increase, if it goes more than negative 50%, negative 100% against me. So on a $5 spread, if you're collecting, say, $2 in premium, a stop loss of 100% would typically buy you out at $4. So instead of realizing that full loss, actually that wouldn't work on a $5 spread. So you probably want to lower than 100% loss on that. You probably want like a 50% loss that would buy you out when that hit $3 or maybe even less. You can even set it in dollar terms, right? Like we have here, set it at $1, so your position doesn't get any worse than $3. I should have used a $10 spread in that example to make those numbers make more sense. But in general, it's setting a defined get out point that is before the maximum value of that loss. And so this is really good for choppy markets. It's really good for trades that you set up that look good, but something changes. A stop loss is a great way. Price is a great way of telling you that something's changed. But there is some art to managing them, right? I think if you get too aggressive with stop losses, you're going to get bumped out of a trade early. Every trade's going to wiggle this way and that way, whether it's liquidity, whether it's just time. So setting too tight of a stop loss is going to be harmful to a strategy. Of course, setting too loose of a stop loss and you wear bigger losses. So there very much is an art, whether it's through back testing, whether it's through experience, in setting where these stop losses take place. On the flip side, sorry, go ahead.
I'm so sorry. I apologize. I saw a breath and I had to jump in. Fun fact, we actually provided early day PeakBot. We provided the retail trader the ability to set their own stop loss and take profit, Mark. And to your point, people were winding it way too tight. They were putting like a 2 or a 3% stop loss on it. And they were like, hey, I'm losing 8 trades in a row. What's going on? It was like on a momentum equity-based strategy. And we're like, well, you're not letting the thing breathe here. Really difficult. You're completely right. It's totally a dance and an art. I'll let you continue. I'm so sorry.
No, and options in particular, especially with spreads, you might have multiple legs that are flickering wide, so depending on how that stop loss is implemented, that actually brings up a great point too, right? You can set a stop loss on paper for yourself, which is a very useful tool, right? As part of your trade planning, you might say, you know what, if this hits this level, I'm willing to get out. Kind of providing yourself with that, the preemptive, you're deciding in a calm environment what level you're going to get out at rather than seeing numbers panic and, make a decision there. Or you can implement it algorithmically, either with your broker or with a tool like PeakBot, that you can say, hey, broker, if you see this trade at X level, boom, automatically send an order. Those can be set at the time of trade. They can be set after. There are a lot of different technical implementations of that. The kind of flip side here is the take profit. So in the same way that the stop loss will get you out in a risk managed way, taking profits is also a risk management tool. That if something is in your favor, if it's reached 70% of the value, 80% of the final value, it's only worth a nickel at this point. Whether you set it in dollar or percent terms, those take profits are going to get you out of a trade when you're in the money and lock in that gain. Again, very much the same kind of art question here as with stop losses. You want to set that at a level that's going to capture some material profit. If you set it for a nickel of profit, you're only giving yourself a little bit of gain to a lot of risk on the other side. But you also want to take some profit. So there very much is that same balancing act of what levels to set them at. Depending on the trade, like with the Iron Condor bot, closing that for a nickel, great do. You got almost 90% of the value most of the time that you're capturing. Other times, you might look more on a percentage term. If you're selling something meatier, even taking 50, 70% profit can be pretty, beneficial to a trading strategy. And again, setting these through experience, back tests, understanding of the stock, the spreads, your opinion. It's really as simple and as basic as these are. The art here is quite fine in terms of getting the right levels.
Mm-hmm.
Yeah, and more so when you try to build that into automation for the retail trader, right? These stop losses and take profits. Mark, you mentioned some that we have built in, right? From a take profit standpoint, Iron Condor has the contract set at good till close limit order at 5 cents. Trend spread, if it's entering on Friday, Monday, 60% take profit, we're out. That's what happened for me this week on my Etsy position. Took out right away. And then throughout the week, there's additional take profits that are built in. And then the stop losses, again, on a lot of our strategies, a lot of our partner strategies, these are baked in. Ben, as we were talking about this, I was thinking, again, it's so tricky to install these and get them to work consistently across a lot of underlying stocks. But stop losses on trend spread, has that ever been a thought from a development standpoint?
I mean, it has been, and there's been a lot of experimentation as to where that stop loss should be. My initial thought was, well, if we're somewhere between the spread, if our sold contract has been breached, but our bought contract has not been breached, I think that it gets tricky because you want to stop your loss at that point, because if price keeps going against you, you're going to lose that whole spread. But if that happens on a Monday, you still have a week for that price to bounce back, and you don't want to prematurely exit. And kind of like you did with ticker NEE last week, right? Totally. You saw a spike in price. The strikes had been breached. You said, "I'm out of here. I'm gonna take my loss and run." Whereas I, on the other hand, honestly, I didn't even notice it. But so I just let the position ride, and it turned out to be a win at the end of the week. So it's tricky. It is tricky.
It is. Yeah.
Mark said it well. It's more of an art.
It's totally. And the best traders on the planet lose sleep over these two things right here, right? If everybody could have this figured out, we probably wouldn't be here on the show today. So
it's ironic that it's such an art, yet I love that last bullet point that we have under take profits. And I think it actually goes for both, is that it helps remove the emotion from trading. Yeah. And that's a really important feature of these, is whether you're writing it down on paper for yourself, ex ante, or whether you're programming it into your broker, that removing that emotion and making that decision before the market moves on you is incredible for the trader psychology.
Draw your line in the sand, stick to the plan, have a plan, draw the line in the sand and stick to it. And automation certainly helps that. So awesome. Fantastic. Let's learn something session today. Gentlemen, what else can we cover here? Do we want to do a little economic events? Do we want to do a little SPY analysis? How are we feeling about condors this week? Not financial advice if it's from Ben.
Or me.
Or Mark. How are we feeling about we keeping calm this week and condoring on? I need to really quick, like I need to find my 1 or 2 days throughout the week that I want to play my condor. That's my approach now. I want 1 or 2 successful condor plays throughout the week. So this is helpful. What do we got going on?
So here's the economic calendar. I'm on TradingView right now. Today, we don't have much going on. Inflation expectations and some bill auctions this morning, but nothing on the agenda for later this afternoon. Tomorrow morning, we've got job openings, which is marked as a high importance event on TradingView. I personally have seen Jolt job openings blow up condors before. So I might be smart exiting my condors today. And nothing really of note for later on in the day. Moving into Wednesday, we've got inflation rate reports, a bunch of them pre-market. So that will probably mean that I'm going to have my condors off from Tuesday going into Wednesday. And then, there's just a lot of news. There's a 10-year note auction on Wednesday, and that would be after entry. And then we got PPI on Thursday pre-market. And
that can shake some things up, right?
That's going to be another event that I'm not going to want to trade through. And then we've got this Michigan Consumer Sentiment Report. This is just the preliminary report. But last month when this report came out, it just completely blew everything up.
Everything.
And I never had anticipated that to happen. And I don't even know if it was previously marked as high importance, but
I don't think it was.
Maybe after the market movement from the previous sentiment report, TradingView is now marking this as high importance. But I don't know. That's the only thing on Friday that would make me hesitate from trading condors from Thursday into Friday. But overall, it looks like condors for me will be off most of the week.
Maybe today. Maybe
starting with the smart exit because I'm in 2 positions from over the weekend.
Yeah. Okay.
I'm going to agree with that sentiment, and I'm not sure whether the volatility is going to come from economic events or, the geopolitical macro or more geopolitical than macro backdrop that we have here. And I think that's going to dictate a lot of the chop. I think that's where a lot of the uncertainty is coming from. And I think, to the point about Michigan, even that we're in a little bit of a paradigm shift in terms of like which of these economic indicators the market's most focused on. For years it was CPI, and we've seen a pretty waning kind of significance to CPI moves. So, as we're kind of in between regimes about what data points are significant, what's happening outside of specific economic data releases, it leaves some chop out there. And, down, 80 points in SPX this morning, I think we're seeing that realized too.
Yeah.
It is tough out there. Again, specifically the retail trader trying to react to this volatility, intraday is wild. Again, looking at the Iron Condor watch list, Friday's data will be updated. We'll see what we're doing around noon today for Monday's Condor entry. But as of Friday, a 1 DTE Condor straddling the 25 Delta on SPY, paying $71 in premium. QQQ 77, XSP 66.
No,
well,
that's
skewed old data.
That's end of day data.
Okay, apologies, but we've seen crazy high fills on the condors as of late, above 50 cents, above 60 cents. Ben, you filled at $70 last week on something.
I did fill a 170-cent order, but I still think that there's something funky going on with pricing.
Okay. Apologies, but not crazy. I mean, we saw, I think live you fill on like $70. And again, pricing is a bit weird, but volatility up, Condor premium up.
Yeah. And hey, let's not be shy about it. I mean, we were hinting at like the geopolitical landscape. Donald Trump gets on screen and anything can happen. And I think one thing that we are doing to protect ourselves against that from happening, regardless if you like his policies or not, the matter of the fact is he can move markets and the events surrounding him can move markets. So we like to at PeakBot look at his daily schedule just to give us an idea of what's happening, right? So you can go to, this is rollcall.com. You can see this. It's a public schedule. You can see what meetings he has today, at least public meetings that will happen over the course of the day. So there will be a roundtable with technology CEOs today. He'll sign some executive orders later today. If we look back to, it was, I think, 2 Fridays ago. I don't know if this list is going to go back that far. No, it won't go back that far. But there was a meeting with the president of Ukraine, President Zelensky, that was on the calendar for a Friday. And, you know, of course, not financial advice, but you could use your best judgment to decide, hey, do I want to trade through a meeting between the president of the United States and the president of Ukraine? So these are all different factors to consider when you're thinking about trading yourself.
When we were looking at this, a lot of tea times. A lot of tea times on here.
It's true. You do see when he golfs.
And he's certainly not shy about it. Of course, now looking at it, we're not going to see one pop up. But the last time we had this, it was up there a couple times. But okay, cool. So, Mark, you mentioned this briefly pre-market, and we're opening in less than 20 minutes here. What are we looking like pre-market here this morning?
I think I saw us down about 80 the last time I pulled up.
Yeah. SPY pre-market's at around 568.
Futures look down 78 points right now, which is 136 bips.
Yep.
Little chop out there.
Yeah.
A little chop. All right. Well, I'm terrified to run condors this week after that session, so we'll see how my anxiety goes there. But yeah, I'll tell you what, my approach to the market has been defensive and you know, kind of like just going with what I know and digging out of this hole here. So, gentlemen,
just as a point, actually, you know, so we're down 136 bips this morning.
Yeah.
If you reverse that formula, you can kind of come up with like this daily move. What does that mean for, you know, implied volatility levels? And if we roughly multiply that by 16, which is a square root of 252 or slightly higher than that, 16 times 136 bips is
I can help you.
I'm going to need the calculator so I don't mess this up.
16 times 136.
It's like an implied vol of like 22, which
2176
sounds lower than it should be, right? I see 7-day implied vol at like 24, but I see 30-day implied vol at like 20. So I tend to think when the realized vol is like this at about the level of the implied vol, that probably means we're still going to see a decent amount of chop still. That I like to see a little bit of premium in the implieds over what's realizing and what we're realizing on a daily basis, because, you know, this 80-point move is, you know, not out of character, right? Like the turnaround we saw on Friday, like the path of this market is significant, and implied vol still isn't quite pricing that. Maybe in the early part of the term, we're getting some higher numbers, but, you know, something to be aware of if you're selling options in this market.
Absolutely.
That we're moving quite a bit, and the markets aren't expecting that degree of move.
It's crazy out there, people. Awesome. Really good data, really good insight here today throughout the episode. Is there anything else that we want to close off with here, guys?
Let's wrap it up and get ready for the bell.
Awesome. Well, thank you for everybody to joining us or for joining us here on your Monday morning. Almost 950 live viewers this morning. We will be live again on Friday for our second show on the Tradier Hub, the automation station, just shy of noon Eastern. Myself, Ben, and Thomas going over PeakBot picks in more detail. If you want to see how we're trading our automated portfolios, of course, not financial advice, but yeah, thank you again for tuning in. We will be live here, same time, same place next Monday, and we'll have more great stuff to go through. So best of luck out there. Be careful, and we'll see you at the peak. Thanks so much, everybody. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.